Hello and welcome to the look ahead for Friday, the 4th of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, not that much going on tomorrow. Fairly sparse economic calendar. Focus is obviously going to be on the US non farm payrolls. And then we've also got Bank of England Chief Economist Hugh Pill speaking. And that I think will be particularly interesting given Andrew Bailey's comments today and what we've seen happen with the pound. So just as far as the US non-farm payroll is expected, we're expecting to see job creation of around 140,000 jobs added in the month of September. That's in line pretty much with what happened in August. We're expecting to see unemployment hold steady at 4.2%. Average earnings are expected just to ease slightly on a monthly basis down to 0.3, or so they're going to rise 0.3% as opposed to 0.4% the previous month. But on an annual basis, that will remain steady at 3.8%. So I think, as long as the unemployment figure doesn't drastically drop and we don't have any signs that sort of the US jobs market is collapsing, which I don't think we're going to get, given the lead indicators that we've seen this week. The ADP payroll was better than expected. It rose for the first time in 5 months. Jobs openings were also stronger than expected, unexpectedly rising. Jobless claims, a little bit higher than forecast, but still, relatively subdued and within a range that they've been for quite some time now. So there's no strong signs that we're expecting to see a very weak report tomorrow at all, in fact. So I think if anything, we could see things a little bit stronger than what they've been forecast. But anyway, let's just have a look to see what's going on and what all this means to the market. And we have to look at the sterling US dollar. Obviously, we've had some data out today as well. From the US, which again, it's the ISM services, was much stronger than expected. So really supporting this view that actually the US economy is holding up pretty well. There aren't really markets have been reining back those expectations of a 50 basis point rate cut, particularly after Jerome Powell at the start of the week and after the data that we've seen across this week. There really isn't anything that suggests that the Fed really should be cutting by 50 basis points again at this point. Then we've also got, so that means that we've seen this rise in the US dollar, also those safe haven flows due to the conflict or concerns of the conflict broadening out in the Middle East. Driving safe haven flows into the US dollar, which trades at a 6-week high versus its major peers. And then you've got also Bank of England Governor Andrew Bailey, who sounded a bit more dovish than usual when he spoke to the Guardian newspaper, saying that the Bank of England could cut rates, or hinted that the central bank could cut rates more aggressively if the data showed that inflation was continuing to cool and going in that direction. So that suddenly saw the market ramp up expectations of a November rate cut to around 90%. So the reaction in the pound has been a strong fall lower. And that, as I said, it's a combination of that weaker pound and that stronger US dollar. It's dropped down to 130, which is just where it's trading at the moment, just this level here. Bearish engulfing candle. Got the RSI below 50, fallen below that support there. This is it's looking like a fairly bearish chart, but we do need to see this level broken here, really, in order for that uptrend to no longer be intact. So just watch out. A couple of little things to be watching out for. You got the 50 SMA down there at 130.50, but the key level I think is the 130 level, because we get a break below that. That's creating a lower low. That changes the structure of this chart, which has been in a series of higher highs and higher lows since the end of April. So on the downside, watch out for that 130 level. That's what we need to see in order for there to be deeper, or for sellers to really gain momentum. On the upside, watch out on if we find that 131 level holds on the upside, I'll be watching 132.65. That was the August high, and then above that you've got that 134 level. But that does look a little bit optimistic, going back up to 134 at this point, where you've got Bank of England saying they're going to be cutting rates more, potentially more aggressively, and the Federal Reserve actually reining back sort of aggressive rate cut expectations. So that is the pound US dollar. Let's just also have a look. I mean, there isn't any data out from from Japan, but I just think it's worth having a look at this chart anyway, because it's quite interesting what we see going on here and what's tested. So we obviously had that downtrend that had been in track across the summer, and then you've got the low that was in there at the 139.50 level, 139.60, and we've seen this sort of attempt of a recovery now. We're above that 145 level. This is on a combination of dollar strength, yen weakness after the new Prime Minister has suggested that actually now's not the time for further rate hikes for the Bank of Japan, from the Bank of Japan. So we're seeing a test now. This level here is one to be watching. This is the September high, which is at the 147.17 level, so 147.20. If we get above that, then there's the fib level here at 148.20. That's the 38.2 from the decline. And then above that, you've got the 200 SMA at the 150.70 level. So there are a couple of levels to be watching on the way up. On the way down, I think the 145, we're going to break below 145, watching out again for that 141. The 141, where is it from? Bear with me, 141.70, which was the August low. And just finally, because we are looking at what's going on with the pound, I just think it's always worth, when we're having a look there, to see what's going on. Oops, with the FTSE. And actually, I mean, if we're looking at the weekly, the daily chart, not a whole lot is going on with the FTSE. It's still within this trading range, which it's pretty much been in for the past 6 months. Not a whole lot going on there. So I mean, that's not a massive amount to be watching. Just let's have a look if we get some more information off the 4-hour chart. Have a look here. So on the 4-hour chart, we can see that's the 200 SMA. It's trading below the 200 SMA. It's above the slightly rising trend line that's in place. But yeah. So I mean, just very much range-bound, even on the 4-hour chart. So not a whole load to be watching that. Let's just also have a look now at oil, given everything that is going on. So let me just pull up the daily chart. Okay, so obviously with oil, we've got a lot going on with the Middle East and concerns over escalation in the Middle East and what that could mean for oil supply. There are concerns that maybe that Israel will target Iran's oil infrastructure, which would then potentially disrupt supply, even though OPEC do actually have sufficient capacity to cover a loss of Iran's oil supply. Still, it's just the possibilities that the sort of the suggestion that oil supply will be in focus and potentially dented. Now we can see this is this really important level that we've been watching, that 71.50 to 72.50 range. It's just trying to break above there. We can see that it has actually moved above, spiked above, all the way up to 73.95. So almost up to that, in fact, up to that rising trend, that falling trend line. Hasn't really managed to push up further from there. We're looking for a close above 72.50. If we can get a close above 72.50, or particularly a weekly close above 72.50, then that's going to be really important. And then that could bring the focus then to the 200 SMA at 77.25. So I hope you like everything that you've seen today. And if you have, then please do like. And if you'd like to see more videos like this, then please do subscribe.